Let's start beyond the Federal Reserve decision. Jobless claims Thursday, retail sales tomorrow morning. What are you looking for?
The strength of the consumer. What's unique about this potential cutting cycle? First of all, the Fed hiked rates 11 times. So this could be a really long game. It's not just a one and done move, as we all know, and we don't know how long it's going to take, but it's going to depend on the strength of the consumer. And so when you look at retail sales, when you look at consumer spending, the bulk of the economy, if the consumer is still holding up, what that means is that the Fed is going to be cutting into a pretty good economy. And we don't have a lot of benchmarks for what that looks like.
How would you characterize where the economy is at currently? If I look at the data and just the levels, we can get to the change and how important the change is, but the levels are still pretty decent. Unemployment around 4%, jobless claims in at around 230. If we listen to the companies, some of the consumer-facing companies have been warning about a weaker consumer. Dollar General, an example of that. Ally Financial last week, a decent example of that. How are you seeing things?
If the Fed was in this economy 15 years ago, I think we'd have a different conversation. This is a pretty good economy. Yes, there's some things to be concerned about. I'm really concerned in the jobs market about how segmented the concentration of hiring is, how weak manufacturing is. For the consumer side, I am concerned about the very low savings rate, very much lower than historical averages. I'm always concerned about housing in this economy because it's such a driver of inflation. But when you look at these jobless claims that'll come out on Thursday, I think what you'll see is pretty moderate low levels of initial jobless claims signaling layoffs. What we're not seeing is big job losses. That's unique in a Fed rate cutting cycle.